Happy Friday, Brian Manning here with your weekly update. Let's get right to it. Monday of this week, we got pending home sales. So on a year-over-year basis, pending home sales are up 3.9%. So still really good to see on a national basis. Tuesday this week, we got Case-Shiller. Case-Shiller is one of the largest providers of data on the housing market at local and national level. And for single-family residences, appreciation-wise, year-over-year basis, Case-Shiller nationally says that we're up 6.8%. Phenomenal to see the housing market recovering the way it is. And as we already know, this Case-Shiller says this is primarily from low inventory levels. So whether you're at a local basis in our markets here or on a national level, inventory is a problem everywhere, causing appreciation to stay strong. Forecast from Case-Shiller for appreciation in 2016 on a national level is 5.2%. Really good to see, super solid, and it's something that looks like that we can withhold for a little while now. It's jobs week, so first Wednesday of every month we get jobs data, and first Friday as well. So Wednesday this week we got data from ADP. ADP is the largest provider of private payrolls in the U.S. And ADP said in the month of November, 217,000 jobs were created, really strong. And they also had upward revisions of their prior months by 14,000 jobs. So again, a really strong report on Wednesday. Thursday this week, markets tanked yesterday. So the European Central Union is kind of going through the same process that we did with quantitative easing, which is what pulled us out of a recession financially. Thursday this week, Mario Draghi announced through the European Union that they were going to have their rate cut again, which was expected. The problem was that they only cut their rates by 10 basis points. And investors on a global level were looking for a lot more than that. And they also wanted to see more assets being purchased. When we were in our recession going through quantitative easing, part of the process was the Federal Reserve purchasing mortgage-backed securities. And so right now the European Union is going through the same exact process, and just investors were very disappointed. They thought there should have been more of a rate cut and there should have been more assets being purchased to help boost the economy there. So certainly shook the markets up on a global level. Today, final day of employment report for the month of November. BLS reports the first Friday of every month. That's the Bureau of Labor Statistics. What happened with employment last year? BLS says we had 211,000 new jobs created last month in the month of November. Super solid. And then we also had 35,000 jobs in upward revisions to the prior months. So I can tell you right now, this is the clincher. Reading between the lines of Janet Yellen's last two speeches this week, certainly said if employment comes back strong, we're looking at a rate hike. So I would just count on it. I'm not a gambling man, but I would bet on this that we're going to see a 0.25% rate hike on December 16th. It's okay. Markets have already factored it in. Investors are already expecting this, and everyone's just focused on the economy now. I'm around all weekend. Would love to be part of your business. If you have any clients you need to get pre-approved, any questions, call me anytime. Have a great day.